kept falling and went right down into the close. So what we have here is a rejection of the attempt to extend the range. Now we could say that big money has clearly determined that there was no value up here, and they're going to place their bets on the short side, or they're going to take profits, or however, whatever their positions were, they're now on the side, the bearish side of the market. So this is also going to tell us what's going to happen the next day. So the attempt to initiate and extend upwards was rejected. This value area seems to be it's what held the prior day, and now this would be the target possibly if the market were to sell off. But value was established at a higher level for most of the day. So on this day, that's what the market participants are going, that's going to be the first test. Can this attempted upper value area be regained and held the following day? Yeah, it was rejected here, went back and closed in the earlier day's value area, but maybe the market's participants want to give it another chance. But it opened lower, right on the prior day's point of control, where the maximum volume had occurred. So on the 12th, which is Friday, they opened lower, and they worked hard all day to try to regain that value area. Now, that's also valuable information. When we see it doesn't regain it in the first hour, we know this might be a good area to sell up here near the value area low, or the value area the low of the prior day. And in fact, that was the place where you had the opportunity to make money intraday. And not huge moves, but still from 87.27 area down to 86.88 area, there's plenty of money to be made in that range. And then at the end of the day, perhaps you might have gained confidence to buy lows in here somewhere, thinking that the market is holding on that earlier point of control, and that's what the participants decided, and they managed to get back up into at least the value area here. So you can see that the value area analysis allows us to identify very, very strong indicators of where the really most powerful support and resistance levels are, because they're based on where people put their money the day before. It's not just a statistical average of price levels or mathematics like the pivot numbers, which also can be valuable and useful, but this is something that is really a reflection of the most money in the market each day, and this tends to have very, very effective repeating strong indication of where the support and resistance levels are. And so we can use that every single day, and it can be extremely helpful for us to determine our places to get long and short, our levels to trade off of in all kinds of situations and in all time frames, whether we're trading very short time frame scalping tick charts or trading off 15-minute bars. You can see that there are quite a number of opportunities to trade off of even the 15-minute bars. So you don't have to be a frenetic short-term scalper, and you can trade it many different ways. You can swing trade it, you can hold overnight, you can recognize the rejection here and noticing the return to value area. You can be possibly very aggressive selling the point of control the following day, for example, maybe to get short on a situation like this, because you conclude the market has not made any attempt to reestablish this upward interest, this quickly rejected initiating buying on that day. So there are many ways to use this information, and we'll talk a little bit more on a future video and article, still looking at this more kind of overall day-to-day context before we go too deeply into the shorter term entry and exit process and how we really fine-tune this and pick our trades and all of that. But for now, we just to give a little foretaste, we can even see when there's an obvious advantage to be very, very strong in trading with the trend and favoring the short side here when we see that it is gapped down below the value area and has made no attempt whatsoever to regain it. We might be looking at what some people call time framing, where we get a chance to get back in high up in a 15-minute bar that has made a significantly lower low. We might want to sell in here somewhere, even though the average trader is going to be real afraid to sell that far away. But we just have a lot of conviction based on our evaluation of these value areas. And a trader here might even sell very close to the open. He might take a chance on a 3-minute breakout of the open right here. So it went up maybe for a minute or two, and maybe a 5-minute bar breakout, or whatever, a 10-minute bar breakout, and then put a stop up here. There's just so many ways to trade off of this, and we'll look at a number of those. But just to know the extremely predictive value of these levels day in and day out. And on our next video, we're going to go through a little bit more of a look over time at how significant these levels are day to day, and we'll see if we can get a little more confidence. Don't just take my word for it. Let's see if we can show lots of more examples of the way the market always responds around these levels. So until now, hope you enjoyed this video, and we'll